Hey, welcome back to the Hub channel. My name is Brandon, and obviously this is my favorite time of the week. We get to discuss markets live with you all in the chat. And of course, I have Rob Roy here with me today. Rob, get on in here. We had the jobs report numbers come out this morning. We have the market. It looks a little greenish, which is nice to see, just barely green. So we're watching that. I cannot wait to hear what you have to say about what's going on and all of that data that we just got. I mean, it was a little better than expected. What do you think with the market, the way it's reacting, and what are you seeing right now, Rob? And welcome back, New Year's, man.
Yeah, I was going to say Happy New Year, Brandon. Good to see you. And you're spot on with what's going on in the market. I do have a few comments, as I'm sure you're used to by now. But the ADP report that came out, it was hotter than expected. But, that's a private report, and the government number doesn't always jive with the private sector report. But in this case, it did. Both numbers were hotter than expected, and that has bumped rates up a little bit. So a couple comments here, and we take a look at the chart of the S&P. One of the things that I've noticed over time, we've talked about this before, the Santa Claus rally is known as the period between Christmas and New Year's. The market tends to drift up during that time frame because basically nobody's there. And then when everybody comes back after the New Year's Day holiday, the market tends to give back the Santa Claus rally. It's like the traders that weren't there say, well, that doesn't count because we weren't here. So we're going to push it back down and then we'll start over, a reset, if you will. And that's kind of the way the market has played out this year. Nothing's 100%. It doesn't do it every time, but it's done that a lot. So we come back and look, we broke above this 460 level. And I would say that kind of right in here around mid-December is when we started this Santa Claus rally part. And so look what's happened. We've given back almost every bit of that. I think one thing to note is from the time that we reopened after January 1st, the high of the day has hit the 10-day moving average, not the low of the day. So you see during the rally, we were following that 10-day moving average to the upside. Now we're following it to the downside. And it wouldn't surprise me if we go all the way back down to 460, but I think we could stop anywhere in here. It's going to be interesting to see how much further we go. But talking about interest rates that you mentioned, and again, you're spot on with the jobs report, there's a little bit of chatter back and forth in there, Brandon, on whether or not that means we're pushing out the expectation of the Fed rate cuts, or could this, the numbers have been, and the way the market has been viewing it, that inflation has been coming under wraps and is kind of getting into that target range that the Fed said that they wanted, especially on their PCE report, the one that they really look at. And then all of a sudden we get this little bounce up in jobs. And one of the last bastions of the inflation was wage inflation, wages going up. And that had actually softened a bit until this report. Now, was this just because it's the December report, right? So was that people adding jobs going into the end of the year? If you read what the market pundits are saying, they're all on the fact that companies are reluctant to let workers go, but they've let quite a few of them go. But regardless, we've had this bounce in rates, and that has don't you love the fact that the Mag 7 is now the Lag 7? It's the media with their vernaculars. It just blows me away. But a little bit of a bump up here. And we held this wave for, just in the area right close to where this Elliott Wave pattern would become disqualified. And I've said that I just don't see the catalyst to drive rates up here. I just don't see that happening. And I still feel that way. A little bit of a bump here, I think, is it's just been kind of a little bit of a correction from this big move to the downside in rates. And the market never moves in a straight line. We always move in impulses and corrections. So I think this is just a corrective bounce from this big move to the downside. I'm not ready to go Lag 7 like everybody is talking about now. I just think this bounce is use the jobs report as an excuse. I think the January jobs report is going to be way more important. Again, I think the December one could have been skewed a bit with holiday hiring, et cetera. But we do have to keep an eye on rates moving to the upside for the tech stocks. And if we look at the dollar has bounced a little bit as well. So that kind of makes you wonder, is there some concern about a recession? One report, Brandon, that came out yesterday or the day before, the ISM was under 50 for, I think it's the fourth month in a row. And for those that aren't familiar, 50 or above indicates growth. And anything below 50 indicates retraction or contraction. And so this manager's report is showing some weakness, indicating signs of at least some sort of a mild recession maybe on the forefront here. And I think the dollar is reflecting that. So you get rates going up, you get the dollar going up, you get the market retracing the Santa Claus rally. All these things make complete sense to me. We'll just have to see if it gets worse. So up till now, I think we're just status quo, so to speak, that this is what the market tends to do most of the time.
Yeah, I think you nailed that on the head, and the market kind of agrees with you. And I heard somebody say, the markets are never wrong, ever. Whatever the market's doing is the right thing. But I always am a little bit skeptical about these job reports. They always get revised later with the real numbers, and nobody ever pays attention to that. But they definitely play, just like sheep, they play these market reports like they're fact, but they're always wrong for some reason. Anyway, whatever. I didn't know if you saw this or not, but the VIX obviously trending down 5% today. So a little bit of volatility taken out of the market. People did like the jobs report, so some stability coming back in. People liked what they saw, so I appreciate all those comments. I think those were all on point there, Rob. I do have.
VIX, you can see the big move down there on the VIX. Sorry, I didn't mean to interrupt you there, Brandon. But there's the VIX with the move lower, and so we just had this little bit of a bounce and then back to the downside today. Anyway, what were you going to say?
Oh no, yeah, that does bring in a question. I mean, are they going to push out the rates, and if they're going to make that more of an issue if they see the economy reacting the way it is? Who knows, Rob? I guess time will tell when it all comes to that stuff. But we have a couple of questions from the chat. Let's bounce over to those. I love taking their questions every week. The first one, obviously, from Will. I think Will's here every week throwing out the first question and what he wants to look at, but wants to take a look at PDD. So, Paul David.
Yeah, there's been a little bit of commentary on the financial networks about that after this big move to the upside. It is in an Elliott Wave 3 pattern. Good consolidation here from the big gap up. I don't like the gaps, Brandon, so always got to keep that in the back of the mind. But as long as we can stay holding above this 140 level, considering the fact that we're in a wave 3, if we put the DMI on there, it's kind of trying to tell us that maybe the strongest part is over, but you expect that to occur when the market consolidates for 2 months now. PDD is consolidated from this big gap up move. So there's a wave 5 targeted price on this price projection up in the 170 range, and we're only at 146.95 at the time that I brought this chart up. So I think there's still some more upside to go here, but the strongest part of the move is over. So whatever happens from here, you just keep your stops a little tighter. But as long as you're above 140, I think you have to be long this. And there's a lot of I don't know if people have been watching the financial networks, but they've been asking their commentators that come on for contrarian plays, and a lot of them are looking for China that's just been so beaten up to grab a little bit of a move, and the K-Web has been a big topic of a place that you might be able to gain a little traction. With the tech stocks, Brandon, that have been hit with the rate bump, financials are doing better. There's been a little bit of market rotation. Some areas of healthcare have done well. I think money's moving around right now, which it tends to do at the beginning of the year. But I do want to ask you, are you a believer in that mag lag thing? Is that over? Is the whole Magnificent Seven thing dying? Is that not the place to be anymore? I feel like it's a correction, but I'm curious as to a minor correction. Curious as to what you think along those lines.
Yeah, I don't know. Yeah, I mean, with everything, I mean, history repeats itself. So I guess, if history holds true, we could see it happen again. Who knows, Rob? I don't know. I guess.
Yeah.
Not something that's going to influence my decisions, I guess. They'll say that for sure.
If I'm right, and that this is just a temporary bounce up in rates, then I think this is a good buying opportunity for those stocks that have come down a bit. But if I'm wrong and rates continue higher, which I still don't see the catalyst for them to go a whole lot higher, then it's time to sell them and move into something else. I just don't think we're there yet.
Yeah, I agree. I mean, the rotation that you're seeing into these different sectors too, I mean, could play into that. But let's check out Tesla. Will wanted to check out Tesla, and I know we looked at this on the show yesterday we had with Mike, but I want to hear your thoughts on it. What do you see there?
Good old Tesla.
Yeah, good old Tesla.
People still love Tesla. And, we had this has just been Elliott Wave heaven, Brandon. I mean, this is just what happens. You get the triangle that we've talked about in the past. We broke out to the downside. And what usually happens is after the breakout of a triangle, you retrace the breakout. And I think we had talked about this, that you're going to look to move back up towards that 260 area. And look what happened. We went right back there. And now we've backed off a little bit. Tesla's, felt the ire of the interest rates and kind of lumped into the whole tech stock kind of correction that's started this year. And so Tesla's been involved in that as well. It's pretty easy to see. You're looking at this area here around 220 as support. If it were to break that, we're probably looking at 200, which would be the next level of support. I don't know. Again, if I'm right that this is temporary on rates, then I think what we're doing here, to go back to your earlier question on the Fed, I think they're going to be late to cut rates. I think they are thinking that that's probably going to be their next move is a rate cut, but I think they'll probably be a little late. They'll make sure that the economy is weakening first. So maybe we have a little more to go in this tech correction and move higher in rates. But I just feel like all that stuff is temporary. There is a little bit of support here on Tesla right in this 240 range. So, there's your stair step, right? So if it doesn't hold here, we're likely coming all the way down to 220. If that doesn't hold, we're going to 200. I'd be shocked if we went lower than that. But at this point in time, and I know nobody wants to hear this, right? But at this point in time, I think you have to just kind of rest a little bit on Tesla. And for me, I wouldn't want to be long until we broke above 260. But a break above 260, I think you're back in Tesla to the long side. But for now, let's see, can we hold this 240 area? There was pretty good consolidation right here through November into the mid part of December. Maybe it holds here and moves back to the upside. But I couldn't go long until we broke back above 260.
I like that. So, I mean, honestly, just looking at your chart there, and if I'm looking at this thing, I'm waiting I'm sitting on my hands until either 200 or just like you said, either I see a really strong bounce off of maybe 220 as it gets past 260. I'm back in that Tesla play, and I think that's a good thing to watch out for. I like that read.
And I like your comment on 220, I think. Go ahead.
I was just saying, the only thing with Elon, he's such an odd duck, He plays more of the media play than any of these other stocks, I think, on our list that we've watched, Whatever he says really influences what the stock does. So he's a wild card when it comes to these kind of decisions that we're making on Tesla. But anyway, what were you saying? Sorry. The 220?
No doubt on Elon, and yeah, they used to kind of slap his hand when he would come out and make all. They seem to have left him alone now, the regulators, when he makes comments. But what I was going to say is that I like your 220 area. That if we saw that, I think you could take a shot there to go long, understanding that you might have to absorb a little bit back down to 200, but maybe we don't get there. So I would be okay with taking a shot on a bounce off 220. But the good long, I think, is above 260, a break above 260. And I think we're going back to try to test those July highs. But you could take a tradable, a tradable trade there at 220 if we get down that far.
Oh yeah, I like that too. I mean, even you put a stop limit in, who knows, all the way down to what is it? 200. I think you can absorb that, especially depending on how far out you put your options if you want to get into it. But I like that play as well. Let's take a look at Meta since we're discussing some of these stuff here. We have a question in the chat about Meta. Where's it at right now?
Was any stock better last year than Meta? My gosh, I mean,
NVIDIA.
All right. You might have mentioned the only one that would rival this move in Meta, and this has been amazing. It has not had the drawdown that most of the Mag 7 have. It just came down for a couple days, consolidated, and trying to head back up today. We'll see where things end the day, but it's trying to move back to the upside. But that stock is just a juggernaut, has been since the beginning of the year last year, and it looks like it's defying what the other big stocks have been doing in this space. But as far as right now, I think this one again is kind of in no man's land. That's only a 40% wave 5 extension, so there's more that could go there. And if we break above 360, it's really hard to imagine that we wouldn't see 400 in Meta, but it has to break that 360 level first. And the concern here is, even though we're trying to hold and bounce, and one of the few stocks that's actually above its 10-day moving average right now in this space, but if it broke 340, then you're at 320, and now you're really hanging on. Because you could see 300 in a heartbeat if it can't hold there. So it came down and tested it there on the second, and then bounced back up. So I mean, all props to Meta and their performance. But just be careful on a break below 340. I think that changes things dramatically. But for now, I'd watch it, and a break above 360. Kind of the same thing we were just talking about with Tesla. Break above there, you're off and running.
Yeah, it's like more price discovery for Meta, and it has had a good year. But I did mention NVIDIA, and since we have a couple questions, couple in the chat here asking about AMD, I think we should talk about it since we did bring up NVIDIA, and then we can kind of maybe compare the two, because gosh dang it, AMD, what the heck?
We had that nice break, and then we recovered that. I actually sent out an alert to our alert subscribers over at evotrader.com on AMD today. So interesting that you brought that one up. Now, we do have to get above this 140 level, and I'm kind of making the assumption that we do. So a little bit of speculation there. But I think AMD is trying hard to catch up in the whole AI thing, and they, although a nice run since the lows at the beginning of November, have not participated anywhere near NVIDIA is, and they're not. To be fair, they're not in the leadership role that NVIDIA is, but I think there could be a little bit of a catch-up trade there in AMD. We'll see if we can break above that 140 level. The idea here was really the target price was just getting above this getting up to this 150 level and filling that little gap. That was the idea behind the trade. But I think this is, we talked about market rotation, and I feel like maybe that's a little bit of what's going on today in AMD, maybe some nibbling there. So we'll see if I'm right on that one. but your stop clearly here is at 130. You don't want to see it break that. So any move down to 130, I think, is okay. But if it breaks that, then the whole scenario is broken. So here we are live. Yeah. We'll see if I'm right on that.
This may be a little bit of bias. Obviously, people wanting to play AMD if they are starting to get into that AI, just like you talked about, where NVIDIA's already had its run. Potentially, AMD could be the next play if they could do anything with their chips to be able to keep up with NVIDIA or anything along those lines. They may have something worth talking about, though. I still see people, and man, I swear I saw something about who was it? Nancy Pelosi put some more, 25 more million into into NVIDIA. I don't know, something like that. Anyway, so I'm still seeing people put a lot of money into NVIDIA, hoping that the AI play works out for them. But we'll see where this thing goes, obviously. But I think I appreciate that read there on AMD. Rob, man, it's been fun. Obviously, it's been a while since we chatted about the markets through the holidays and other things, and I know lots going on, and gosh dang it, so much happens, but I appreciate your insight. Any closing notes here on the market that you're looking at as a general overview that you can see?
Yeah, a couple quick comments here before we go. First of all, as an interesting comment you made, but I hope people aren't taking their stock advice from Nancy Pelosi. But, NVIDIA is probably a good place to be long-term, even if it's going to go through a little bit of a more of a correction here, whatever. We'll see how that plays out. But I do like the idea of some catch-up with AMD. They're not going to catch NVIDIA, but the base that loves AMD, we used to get this question every single week on TradeFinder, the various live shows that we do. The people that are committed to AMD love that company. So I do think, as you mentioned, that there's a bit of a catch-up trade there. But we can't leave without got to ask you about Bitcoin. It's held in there really well, and what your thoughts are. Is that ETF going to be approved? I mean, what are your thoughts? I know you have been talking about that in the past. Is that gonna get through the crypto?
Interesting.
ETF?
So the deadline for this, I mean, we're talking Gensler and all those guys. The SEC, obviously, they have a deadline of January 10th here to be able to approve this thing. They have been working, I think, nonstop through the holidays to get this thing done. Matrix Point came out earlier this week and said, you know what, this thing is not going to get done. Matrix Point is basically a no-name media enterprise, and for some reason that seemed to move the needle on Bitcoin 7% one day this week, and then it jumped back up to another 7% the day after. I don't know if you saw that or not, but
I did. Yeah.
I think it's a foregone conclusion that it's going to get approved. The question now sits: is it priced in? Is this going to be one of those sell the news events when it does get approved? Have people already purchased? BlackRock buying another $100 million of Bitcoin today in anticipation of the approval. That's going to be an OTC trade, obviously, so it's not going to be on the markets for visual stimulation in any way. But just because they said that, we had another company that applied for an ETF saying they're going to buy another 200 million of Bitcoin today. So obviously, people are gearing up in anticipation of the approval. We'll see how this plays out in a sell the news event. But I think if it does sell off, it's not going to be a lot. We're not going to see a drop back below 37,000 in any way, shape, or form, in my opinion. And once we see that stabilization come back into the market, we're going to see a pretty hefty run. I see a 2x from here this year in Bitcoin.
Nice call. I knew we could we could get some good commentary from you in this space. Appreciate your thoughts.
That's where we're headed.
And comments. Really looking forward to this. And I knew about the 10th, so I wanted to get it in this show before next week. So appreciate the comments.
Heck yeah, we're going to be watching that. Well, thank you, Rob, as always. This has been a great show. Always fun to hang out with you. I love your face so much. Thank you guys so much for dropping by the video. If you haven't subscribed, by all means, hit that subscription button. Go ahead and hit that like button as well. And we will see you next week here on the show.
Thanks.